our first revision lecture for September 2021 exam. So it's like a teaser. It's like I want to tease you on what we'll be doing, so that when I say do something, make sure you will be following through on what I would have asked you. Here's the deal. ACCA does have what is called CBE practice platform. CBE practice platform. It's a platform which mimics or which mirrors the actual. It mimics or mirrors the actual exam environment. That you are not required to enter into the exam without practicing questions on CBE. It's not like spend the whole of your revision time focusing on CBE practice platform. It simply means teach yourself on how you can navigate the platform, familiarize with platform functionalities so that you'll be able to answer exams on CBE. And don't panic from speed, or don't have these drags like speed and a lot of other things, because you are already familiar with its functionalities. How do you access the CBE practice platform? I'm going to take you through I'm going to open my CBE practice platform. So let me share my screen here. I'm going to take you through how you go about it. So if you don't mind, allow me to open CBE practice. Notice you come to CBE PT. This is how I access it. But as for you, you access CBE practice platform through ACCA Global, my ACCA. You log on to my ACCA. After logging on to my ACCA, it will take you to CBE practice platform. Then I will ask one of you to open your screen, to share your screen, so that we can have this matter settled. So, because we are a learning provider, it asks me to choose which one I want. Now I am Atlant Resources, so I'm choosing Atlant Resources. So there you go. I can be an admin or a candidate because we are an institution. So allow me to open as a candidate. Now, if I open as a candidate, it takes me to where you actually see your own CBE practice platform. That's where it takes me to. It takes me to this landing page. Because you don't have anything assigned, so this emoji here is telling you that there's no assigned material. But how then do you practice? You come to the catalog of ACCA here, meaning best content which ACCA has populated on the platform. And you pick strategic business reporting because they are doing SBR, but you can still pick any other subject of interest which you are doing. And you select international. Your SBR version is international. Make sure you don't pick UK or Ireland. You pick international. And then you select ACCA resources. So there you go. These are the resources, ACCA resources we have. There is past exam library. There is past exams. So let me see what we have got. This is the syllabus here. So they wanted to say syllabus, not past exams. I mean, they then practice exams. So here are the practice exams. You can see they populated 3 practice exams. So if I open one here, it comes to the left tab. If I open, it then comes under self-assigned material. This is what you'll be doing as a student. So you can equally open it for yourself. It's now saying start. Right. So this is the exam. This is.
I say,
Oh, you're seeing me myself. Anyone who is not seeing the screen, let me know. If there's anyone who is seeing the screen, please unmute and say it on my side is fine, so that we can tell what is the problem Tandy is facing.
On my side, it's fine, sir.
On your side is fine. Who else is seeing the screen?
I can see.
You can see the screen. Okay, so Tandy, perhaps what I advise you to do is, can you exit and join again? It boosts the network that way. Is that okay with you, Tandy? You can do that right away. You can do that right away. Okay. I'm sure Tandy is now back. Tandy, if you are done, let us know because we are waiting for you.
Yes, now it's okay.
Okay, fine. So you can scroll through. Okay, so let me come back to where I was. I said after assigning your paper, yeah, you pick the subject of interest and make sure you choose SBR International. Anyone can choose the paper that he or she is doing. Then you click assign here, international, and then pass of ACCA official resources, and then practice exams. Practice. There will be a tab which is saying assign. So for you to start doing this, you click assign like this. Once you click assign, it comes here on the left where it's now saying self-assigned material. So you click yes, assign, because I had opened it. It's now saying resume. But if it was for the first time, it would say start. So you need to complete all these exams practicing on CBE so that you familiarize with how your SBR CBE looks like. After you have done, you then come to the top here where it is saying mark. You can self-mark as a student. You can self-mark, but notice after clicking mark, it's not showing anything because there is no exam which I have completed yet. So if you are done with practice 1, you come here to the dashboard and click mark. The paper to be marked will populate here. So you follow the instructions given and you'll be given examiner's marking scheme side by side against your own script so that you can mark it for yourself and allocate your marks to yourself objectively. You get that? And then it will then give you how you are performing if you are doing multiple exams so that you can track your performance. This is what ACCA has made available to us, which you can actually use for your practice, for CBE practice. So I am going to demonstrate this to you with this question. At least if I can just do question A, it will be okay with me for today. So there you go. This is question A. This landing page, once you come here, it gives you quite a lot of exhibits. It tells you what the exhibits are all about. Exhibits are simply details about that particular company. If it was a paper-based, exhibits would be like pages until you get to the required section. So that's what exhibits are. The company is called Banana. So you read, Banana is a parent of a listed group of companies which have a year end of 30 June 2007. Banana has made a number of acquisitions and disposals of investments during the current financial year, and the directors require advice as to the correct accounting treatment of these acquisitions and disposals. So the following exhibits available on the left-hand side of a screen provide information relevant to the question. So these are the exhibits. So everything displaying here relates to question 1. You can tell here it's question 1 of 4. Remember, SBRI has got 4 questions, 2 in section A and 2 in section B. The first one is 30 marks, the second one is 20 marks, and those in section B are 25 marks each. So don't say after answering this, you are done with the paper, because clearly requirements are just 30 marks So you use the navigator button. If you click navigator, which is on the bottom right here, it populates the questions here. So you can see here the section A, you are still on question 1. You can equally start with question 4 by using the navigator like what I have done. You get that? So let me come to navigator and come back to question 1 like this. So what else do I have to talk to you about? There's an inbuilt calculator here, but I don't encourage you to use it because you can click it here, it comes here. It's a calculator which you can use like this. You can see you can change it from scientific to standard depending on which interface works best for you. Scientific here to standard. Normally this one is quite cool for basic computations, but if you are used to scientific, you can as well put it scientific. You can close it if you are not using it so that you make your workspace clean. Okay, so there you go. So I encourage you before you read exhibits to read requirements so that you appreciate what the examiner is looking for. So the question says, draft an explanatory note to the directors of Banana discussing the following. How Goodwill should have been calculated on acquisition of grape, and show the accounting entry which would be required to amend the finance director's error. And then why equity accounting was appropriate for treatment for strawberry in the consolidated financial statements up to the date of disposal, showing the carrying amount of the investment in strawberry just prior to disposal. 3. How gain or loss on disposal of strawberry should have been recorded in the consolidated financial statements, and how the treatment in strawberry, the investment in strawberry should be accounted for after the part disposal. And then next, discuss whether directors are correct to treat melon as an asset acquisition. And then last, discuss how deal recognition provisions of IFRS financial instruments should be applied to the sale of the bond, including calculations to show the impact on the consolidated financial statements for the year ended. Okay, so there you go. So this now tallies to 30 marks. This is where your 30 mark question is. So what then you do is you can close this to make your workspace clean and now go exhibit by exhibit. Okay. Sorry for okay. Sorry for that. So you can now proceed exhibit by exhibit. So this is acquisition of grape. We want to do this question to the full extent so that we answer it. On 1 January 2007, Banana acquired 80% of equity interest in grape. The following is a summary of grape's grape company's equity as its acquisition date. So this is grape, the company we acquired. Remember, we acquired 80%, and this is the equity. It was 70 million. The purchase consideration comprised of 10 million shares in Banana, which had a market price of 68. So we acquired this by share exchange. We gave them our 10 million shares, which had a market price of $6.80 each. Additionally, remember, when you are reading, you can highlight. You can highlight, it's still okay. Notice, I can highlight like this. Additionally, a cash of 18 million was to be paid on 1 January 2009 if, meaning this is a contingent consideration because we are setting a condition. So it's a contingent consideration. It is saying we were to pay a cash of 18 million was due to be paid on 1 January 2009 if net profit of grape grew by 5% in each of the following 2 years. The present value of this total contingent consideration was 16 million. So that was the present value. It was felt that there was 25% chance of the profit target being met. Meaning, remember, contingent consideration, we record it at fair value. So even if the PV here is 16 million and there is 25% chance of it being met, it means we are going to use 25% of 16 million. That's the fair value. At acquisition, the only adjustment required to the identifiable net assets of GREP was for land, which had a fair value of 5 million higher than its carrying amount. This is not included within the 70 million equity of GREP at 1 January 2027. So here is GREP. GREP has got 70 million equity, but in this 70 million, there is no, it excludes the 5 million fair value adjustment for land. So we need to increase the value of land by 5 million. So there you go. Continuing. Goodwill for the consolidated financial statements has been incorrectly calculated as follows. So the examiner is saying incorrectly, even if the examiner is said calculated as follows, it does not mean always it's correct, it might be wrong. So here's how they calculated goodwill. They said consideration transferred, which was 10 million shares times $6.80, so that was 68. And then add NCI, and then notice NCI, they just said 20% of 70, meaning 20% of net assets. So this is partial goodwill method. They used the partial goodwill method. Less net assets of 70. So they took net assets of 70 here. It means there was an error because they omitted fair value adjustment of 5 million. So on net assets, there's an error there. They omitted fair value adjustment of 5 million. On consideration transferred, there is an error there, meaning they omitted contingent consideration here. Remember, contingent consideration is also included as part of consideration transferred. No wonder why they are then saying this goodwill is not correct. The finance director did not take into account contingent consideration since it was not probable that it would be paid. Remember, contingent consideration, we include it whenever we calculate goodwill at fair value, regardless of whether it is probable or improbable that it will be paid. As long as a condition exists, the conditional payment, which is contingent consideration, should be included as part of consideration transferred at fair value at the date of acquisition. Now, additionally, he measured the non-controlling interest using proportionate method of net assets, despite the group having a policy to measure NCI at fair value. So this company has a policy to measure NCI at fair value. So it is that which we should use, not proportionate method. The share price of GREP company at acquisition was $4.25. So the share price was $4.25. So when you are measuring value of NCI, we are going to use $4.25. So this is the exhibit on acquisition of GREP. And you come to the question once again. Question says, draft an explanatory note to the directors of Banana discussing the following. I want you to understand the question. It's saying draft an explanatory note to Banana discussing the following. How goodwill should have been calculated on the acquisition of GREP, and show the accounting entry which is required to amend finance director's error. So students, they think the question is saying how to calculate goodwill. It's saying explain to directors how to calculate goodwill. Please, when you are reading the question, start from this point here. Draft an explanatory note discussing how. So you are explaining to directors how goodwill should have been calculated. You are not just telling directors how to calculate. You are not just calculating goodwill, so to speak. So you have got two response options here. You choose which one is appropriate response option. In this case, is the word processor. So today I'm going to answer everything myself because I'm demonstrating to you. So I'm going to minimize asking of questions. But when it comes to revision time, I will be asking these questions. And I won't be showing you again how to answer these on CBE because you now know. So how do you go about it? You say, you open your response option, which is the word processor. Now, notice, after I had opened the word processor, are you not seeing that my space is now clustered with a lot of things? I can close this one. But the exhibit, I can leave the exhibit like this because I need it. This exhibit here. I need it from time to time. Now, are you not seeing that the exhibit is shadowed by this response option? So if I want the exhibit to come to the front, I just click on it, it comes to the front. If I want it to come to the response option, I click on the top gray area like this, it comes to the front. So this is how I transition the exhibits, like this. I transition again like this. So there you go. So you say explanatory note to the directors of Banana. So this is question 1. Question 1. Explanatory note to the directors of Banana. Explanatory note to the directors of Banana. Note to the directors of Banana. So there you go. You do the underlining later. Otherwise, you confuse you underlining, removing, underlining, etc. So the first explanatory note is, actually, it's explanatory note to the directors of Banana, and then you say 1. How Goodwill have been calculated on acquisition of grape? How Goodwill should have been calculated on acquisition of grape, like this. So this is how you go about it, and then you say, just go to your point. You know how to calculate goodwill. So you need not to define what goodwill is. They want to know how it should be calculated. They know that what goodwill is. So you say goodwill. Go to the point right away. Goodwill is calculated as the difference between the sum of consideration transferred and value of NCI, you can write NCI like this, or even non-controlling interest in full. It is to find the value of NCI less the fair value of subsidiaries identifiable net assets, fair value of subsidiaries identifiable net assets at acquisition. You get that, and then you say consideration transferred includes any fair value of contingent consideration, any fair value of contingent fair value of contingent consideration at acquisition date, contingent consideration at acquisition date, and then NCI can be measured using full Goodwill method. NCI can be measured using full Goodwill method. Goodwill, please mute. Full Goodwill method or partial method. So we measure NCI using either of the methods, but we are told in the exhibit here that the company has a stated policy of measuring NCI at full Goodwill, at fair value. So even if they are both allowed alternatives, what you then do is you say, as the company has a published policy, as the company yes, a published policy of measuring NCI at fair value, comma, then full Goodwill method should be used. Then full Goodwill method should be used. Then after doing this, you'd notice you also say comma, fair value adjustments are necessary if subsidiaries net assets are thought net assets are carried at amounts which are different from their fair values, which are not equal to their fair values, I'm teaching you speed. Though I know some of you are even more faster than me, but you can tell that I can. Now, what about, you may say, what about paragraphing and stuff? Say that one you can do later, like this. You can do later, but for now, later you can now paragraph at this stage and say, applying the above guidelines. That's what a student of your say does. Applying the above guidelines, comma, the finance director made the following errors. The finance director made the following errors in Goodwill computation. Don't worry, we don't penalize you for mistakes. So you may say, is your spelling for Goodwill right? No, don't worry about that. So these are the errors that were made for Goodwill in Goodwill computation. So you can say error A, or you can number your items with dots. It is still fine. You can say fair value of contingent consideration, of what? You can now say what was the contingent consideration. You bring your exhibit. Notice how I'm transitioning to my exhibits. I'm just clicking the top gray area here. So the fair value of contingent consideration was 25% of 16. So I come to this and say fair value contingent consideration of 4 million. 4 million, how have I found 4 million? I said 25% times 16 was omitted in consideration transferred. What was another error? Another error is fair value adjustment of 5 million, because they omitted land again. Land, they are saying at acquisition, the only adjustment required to identifiable net assets of grape was land, which had a fair value of 5 million higher than its carrying amount. So we have to adjust fair value adjustment for land. You bring your case here, fair value adjustment, fair value adjustment for land of 5 million was not included in net assets, was not included in net assets. What else? The other error was NCI was supposed to be measured at. NCI was supposed to be measured at. Now, the company established the policies to measure NCI at fair value. So what you do is you check Agape had 20 million shares. I mean, Grape had 20 million shares. And NCI, we acquired 80%. We acquired 80%. Where is that written here? Banana acquired 80% of Agape. So NCI is 20% of 20 million shares. And they are being measured at fair value, which is $4.25. So they were measured at 20% of 70. Now we want to measure it for 20% of 20 million times $4.25. So it's supposed to be measured at, you say, you need to have calculator nearby with you because we are using CBE. So the calculator is there for me here. I can equally get it here. So it's a matter of, you can punch the figures in the calculator by punching them on your key, on your key, the keyboard, to say not on the calculator itself, but on the keyboard. Times 2 times 20 times $4.25. Are you not seeing? I'm punching on my keyboard here and press enter. So if I press enter, I'm getting 17. So I can close the calculator to clean my workspace. Are you not seeing? Don't try to punch figures on the calculator itself. It takes you a lot of time. Just punch the figures on the keypad of your laptop or for your computer. So there I go. I navigate to bring my cursor to the front. So it is 17 million. NCI was supposed to be measured at 17 million. However, I calculate 17 million, I said 20% times 4.25, $4.25 times, times 20 million shares. 20 million shares. So there you go. So revise the goodwill because they are saying how goodwill should have been calculated. So you can say correct computation of goodwill. Correct goodwill computation. Now you may say now that you are calculating goodwill, why can't you go to the spreadsheet? You can still go there, but remember the figures are so they are not figures which can give you confusion. Remember, you're not writing a report to the board where you say I can't put workings in a report. You are just writing an explanatory note to the board. This is not a report. You can put your workings there. Even in the question itself, they have said any workings can either be shown in the main body of the explanatory note or in the appendix to the explanatory note. So you can put workings on spreadsheet or on explanatory note. So if the workings are so easy, like in this case, goodwill computation, just put them here. You know what you need to work out goodwill? You need a table. So you can just put a table like this. Notice I picked a table, and this table can be a table like this, where I just want to calculate my goodwill. So I'm already calculating goodwill. I put millions of dollars here, just to observe that these are millions. So what I do is I say consideration transferred. Consideration transferred. Consideration transferred. Consideration transferred is in two parts. There is share exchange. Share exchange. It's already given a 68 million. Remember, these are the figures. They've already worked the sum of the figures. So I just put 68 here, tab, and then there is contingent consideration, because I am now sorting out the mess myself. Contingent consideration. I have already worked it out here, 25% of 16. So contingent consideration is 4. And then tab, fair value of NCI. Now, this you now know from your notes, it's 17. I've just calculated fair value of NCI just now. I'm showing it to you here for expedience purposes. And then net assets, fair value of net assets, net assets. Remember, there were 70 million. I have added another 5, which is the fair value adjustment. So I now have 75. And now I have goodwill. This is how goodwill should have been. My 75 here is in brackets. Clearly, Shingai, you can't say, why can't you do this on Excel? Clearly, you can't be troubling yourself with these few figures. What do you do here? You on your calculator, you clear by backspace. So you're saying 68 plus 4 plus 17 minus 75. So your enter. So your goodwill is now 14. So you put 14 here. This is your goodwill. Now, after you have calculated your goodwill, the question then says, what are the journal entries to correct the errors? They are now saying, and the question ends by saying, the accounting entry required to correct finance director's error. You then have to put that accounting entry. So what do you do? If you want to exit your table, just come underneath the table and click somewhere like this. So you say accounting entry to correct finance director's error. Remember, accounting entry is the journal entry to correct FD's error. The journal entry to correct finance director's error. Remember, journal entry you need to debit and credit. What you know is goodwill was calculated as how much? You come here. Goodwill was calculated as 12. In other words, there is 12 recorded already. And here you found it to be 14. So you need to increase goodwill by 2. So you say goodwill, you are debiting goodwill by 2 million. What else? Notice, net assets, when you acquired, you considered them to be 70, but you realized that the net assets are not actually 70, but they are 75. So you say debit property, plant and equipment, because land was revalued, fair valued by 5 more, PPE 5. And then what else? NCI here was calculated as 14 by the finance director. Now what do we have? We got NCI of 17. So we need to increase NCI from 14 to 17. So it's a matter of saying credit NCI, because NCI, remember, it's a liability account. So you credit it. It's under equity account. So you say NCI, we are increasing it from 14 to 17. So that's 3 million. Deferred consideration. Contingent consideration is a liability, because it's a liability that you shall pay. So this, you then increase your liabilities. So this is credit, liability. It's a contingent consideration. So just say liability, you can put CC, contingent consideration, by 4 million. So you can now see after we have done this, we have corrected finance director's error. Our journal is balanced. It's a single entry like this. It's a single, and as it is, don't then begin to give narrations here, because the narration is already there. accounting entry to correct finance director's error. That's the narration for this entire journal. Right. So there you go. As I have said, today I'm going to do it myself. I will ask you questions as I'm wrapping it up shortly. We just want to do this 30-mark question for illustration. Then another question says, that's now question B. Why equity accounting? Now, another issue that I want to show you is, if you realize that this question is very long like this, you can copy everything. You can copy all the questions. Notice, it is required in the exam to copy all the questions. You click copy like this, and you close, so that I won't be coming to the questions again. And then I get to this here and paste. By pasting, I can say Control V or proper pasting. So after doing this, I no longer have to come to go to the questions over and over again. I am now on question 2. Explain why equity accounting was appropriate for strawberry. So what I simply do is I remove the marks, and right away I begin to answer. I begin to answer. So it will be like this. If I know that it's bold, it's fine. I will remove the bold and stuff. So what I'm now going to do is to open an exhibit on strawberry. So as far as grape is concerned, I close it to keep my workspace clean. Now I am on strawberry. This is what I have on strawberry. It's a very small exhibit. So what I do is I come like this. Oh, are you not seeing? I am zooming the exhibit. Oh, let me show you. Perhaps I did it in a hurry. I open my exhibit because I had zoomed it already. It's now zoomed. It's 210. It's now 110. So you can, when you open it, it will be like this. But as you can see, it's not legible enough. So there's a zoom out sign so that you can zoom. I don't know, is this called zoom out or zoom in? Enough of whether it is out or in. The issue is I am zooming it. Now, let us read together. Banana had purchased the 40% equity interest in Strawberry Company for 18 million a number of years ago, when the fair value of identifiable net assets was 44 million. Since acquisition, Banana had the right to appoint one of the 5 directors on the board of Strawberry. The investment has always been equity accounted for in the consolidated financial statements of Banana. Banana Company disposed 75% of its 40% on 1 October 2006 for 19 million, when the fair value of identifiable net assets of Strawberry were 50 million. At that date, Banana Company lost its right to appoint one director to the board. The fair value of the remaining 10% equity interest was 4.5 million at disposal, but only 4 million at 30 June 2007. So it was, disposal was on 1 October. Are you not seeing? You can highlight, the dates are important. You can highlight the date. 1 October was the date of disposal. Year end is 30 June. So what is happening is, at date of disposal, the remaining interest was 4.5 million, but at report date, meaning about 6 months later, or 9 months later, actually, about 9 months later, it's now 44 million. Can someone help me mute our colleague here, guys? I'm hearing some echoes. You know, it's amazing. It's amazing that, as you say, when I'm in a lecture, I was telling you that someone is disturbing me on the phone, and I since muted it. Yet I'm the teacher who must be even being on my phone and stuff. And you, as a student who is learning, you are busy on your phone. What is that? Okay. So, so there you go. So Banana Company has recorded a loss in reserves of 14 million calculated as the difference between the price paid of 18 million and the fair value of 4 million at the reporting date. Banana Company has stated that they have no intention to sell their remaining shares in Strawberry Company and wish to classify the remaining 10% interest as fair value through other comprehensive income in accordance with IFRS 9 financial instruments. So that's all. That's it, according to Banana. Now, according to Strawberry. Now, the question is, why equity accounting was appropriate treatment for Strawberry? Remember, equity accounting is done when you are accounting for the investment in an associate. So for Strawberry to be equity accounted, it must have met the criteria for definition of an associate. If you look closely, it's saying explain why equity accounting was appropriate. It's not saying tell us whether it was good or it was the correct one. No, the directors are doing it correctly. Now the question is, tell us why. The question is not tell us whether they were doing it correctly. Are we together? So other students may think that the question is saying they were doing it. Were they doing it correctly? No. It's saying why equity accounting was appropriate, meaning it was correct. Tell us why. And then they are telling us that calculate gain or loss on disposal and the carrying amount of investment. So the timeline of events is like this. Strawberry was acquired 40% equity interest, meaning it was between 20 to 49%. So it was within the associate category. So an associate is not consolidated, but it is equity accounted. And why do we say it's equity accounted? It's an associate if a firm has got significant influence. In this case, we are being told that Banana had a right to appoint one director out of 5. So this is significant influence. So this is what they want you to write. So all you simply do is by acquiring 40% of equity of Strawberry's equity, let me say S is equity, comma, Banana is assumed to have significant influence. Banana is, oh, sorry for that, is assumed to have significant but not controlling influence. Significant but not controlling influence. You get that? Influence. That's the issue there. This is evidenced by power to appoint 1 out of 5 ACCA directors, Strawberry's directors. That's what I'm saying. You know, the reason why I'm putting S is because the spelling for Strawberry, you know, it's a spelling that if I'm to write it in full, I will be referring over and over again. So why bother? It's just S is director. So there you go. Therefore, S met the criteria for classification as an associate. The criteria for classification as an associate. It met the criteria for classification as an associate. Hence, equity accounting was appropriate. Equity accounting was appropriate. Now, if you realize that the examiner began to describe what equity accounting is, I told you that examiner's answer is broad. Clearly, if you read the marking scheme and see the examiner beginning to describe what equity accounting is, it does not mean you have lost marks here. Remember, this question only has 4 marks. So we have answered the heart of the question. The issue that there is no way where they are saying what is equity accounting here. So if you see that in the marking scheme, it does not mean they want it. It's simply additional information they are giving you there. Notice I had to remove bold by highlighting everything and click B. That's how you remove bold. Okay. Now the question says, and up to the date of disposal. And then they're saying, showing carrying amount just prior to disposal. So you then say, carrying amount of strawberry, carrying amount of strawberry S just prior to disposal. Remember, we are simply saying carrying amount of the associate. The examiner knows that if the examiner says it was an associate right away, you begin to know it right away. So the examiner says it says calculate carrying amount of strawberry. So it's a matter of putting your table like this. And they say cost of the associate, cost of associate. You now relate to your sales notes. How much did we pay for strawberry? Here, we bought strawberry 18. We paid 18 million, so that was the cost of the associate. You put 18. Then you then say share of post-acquisition reserves. Post-acquisition reserves. You know, this is how you account the associate. You take your share of post-acquisition reserves. Now, the reserves were 44 million at the date of acquisition, but they are now 50 million at the date of disposal. They were 44 million at acquisition, 50 million at the date of disposal, and we own 40% of this. So it's a matter of saying here, open brackets and say 40% times, they increased by, so there you go, 40% times 50 minus 44. So it's 40% of 6 actually. And what you do, 40% of 6, that's 2,4. So carrying amount at date of disposal, you now have your associated the carrying amount. So the carrying amount of the associate then was 20,4. That was the carrying amount of the associate. That's what they want. And then what else is required in the question? And then they're saying, showing carrying amount of the associate. Okay, so that's the carrying amount. So that we are done with this mark, with these 4 marks. It was just 4 marks, so it's done here. So next, show how gain or loss on disposal of strawberry should you have recorded. Show how the gain or loss, if you dispose an associate, the gain or loss is recorded as other, is recorded in other income, not in, or is recorded in profit or loss. That's the best way of putting it. Remember, it's an explanatory note to directors. So you say, okay, so let me write. I then say following disposal of 75% of investment, yes, comma. I mean, banana should compute gain or loss. Banana should compute gain or loss on disposal, and recognize it in profit or loss. Recognize it in profit or loss. So this is what you should do as banana, following the disposal of 75%, you should recognize gain or loss on disposal and recognize it in profit or loss. This is computed as follows. This is computed as follows. Still remember how I told you we calculate gain or loss on disposal? This is now about knowing what your say told you when we did the groups. Remember what I told you? I said when you're calculating gain or loss on disposal, you say fair value of consideration received, fair value of consideration received. So it's a matter of checking how much did we receive when we disposed. They are saying it was disposed for 19 million. So we received 19 million. So you come here and put 19 million. And then you say, all right. Sorry for this tab. And then you say add fair value of any remaining interest. Are you not seeing, for whatever reason, this row here, it just widened itself, and I'm trying to make it thinner, it's refusing. That should not be your baby because it doesn't give you any mark. So you say add fair value of any remaining interest. Any remaining interest. Now, the remaining interest is given by the examiner. They are saying the remaining interest was 4.5 million. You come to your word processor, you put 4.5 million. And then you say less carrying amount of investment at date of disposal. Remember, you disposed the associate, which was the carrying amount of associate at deal cognition. Remember, the associate is now being deal cognized because it was at deal cognition or disposed. That's what we mean. Also, the carrying amount of the associate is what we calculated above there, 20.4. So the associate had a value of 20.4 at the date of disposal. And then the answer that you then get is the gain. This one, 20.4, you can put it in brackets just to tell the examiner that this figure here I'm subtracting. And then you calculate gain, and clearly there's a gain there. There's a gain of how much? You have your calculator, don't worry much. Bring your calculator to the front. Make sure you are using the keypads for the, so you can do it like this. And then you know these are versatile. I can move these tabs like this. So I am on the calculator tab. Make sure you pick it like this, the calculator tab. And then you clear by backspace on your laptop or on your phone. So you're saying 19 plus 4.5 plus, oh, sorry, minus, oh, I screwed it up, you know, because I cleared, it eliminates everything. It cancels everything. Minus 20.4, then I press enter. So the gain is 3.1. So I put a gain of 3.1 here. So this is the gain on disposal. Are you not seeing the versatility of the you know, how versatile they can move these tabs here. You can move to open space. So this one, make sure it's in small caps because the question is in caps. So your answer should be in small caps for the examiner to see right away where your answer starts and where your answer ends. Now, as far as banana is concerned, what they had done is they had actually calculated a loss of 14 million. And they had found it as a difference. I can strike through here so that you see where I'm reading. They had calculated a loss of 14 million in reserves. They just said 18 minus balance at 30 June. So this loss was wrongly calculated. So what do? We have to reverse it. we have to reverse the loss. So the calculated loss. So it's a matter of telling the examiner that the calculated loss of 14 million, or you can say $14M must be reversed from reserves. It must be reversed from reserves. And now there's another question. There's the other part of the question which says, what are they saying? They are saying how this should be accounted for after disposal, how the remaining interest in strawberry should be accounted for after disposal. Now that it was an associate and we disposed the 75% of 40, in other words, we are now left with 10%. We disposed the 30%. So the 10% investment in strawberry, it's no longer an associate. This is now an investment in equity instruments. Because it's an investment in equity instruments, it is now accounted for in accordance with IFRS 9. Now, IFRS 9, that's financial instruments. IFRS 9 says that if the business model is to hold the investment for the long term, then it must be accounted for as financial asset at fair value through OCI. This is basically what you write to wrap up the answer. You then say the remaining 10% of investment here. That's what you do. You then say the remaining 10% investment is the remaining 10% investment in S is accounted for as a financial asset in accordance with IFRS 9. When you cite the standard for the first time, you say IFRS 9, you put a semicolon and say financial instruments. Don't expect the examiner to know it, financial instruments. If you don't know the standard, don't cite it, otherwise you compound the error for yourself. Can you imagine? Suppose you didn't know which standard talks about financial instruments, and then you say in accordance with IAS 20. Imagine. And then you say in accordance with IAS 20 financial instruments. That one is not called a mistake, it is called that is called vulgar. You in your answer. Don't even cite a standard if you don't know it. It's better to just proceed and explain on the go. Okay. The remaining 10% investment is accounted for as financial asset in accordance with IFRS 9 financial instruments. Full stop. Then you say since banana intends to hold this as a long-term investment, comma, it is accounted for as financial asset at fair value through OCI, because it meets the financial asset at fair value through OCI business model. So what then do we do? Thus, notice, on acquisition or at acquisition, the fair value of that remaining investment was 4,5, but at reporting date, it's now 4. Here, it was 4,5, but it's now 4. So it is recognized as a financial asset at 4,5, and the decrease of 4 is recognized as a loss in OCI. So you can just say thus comma, banana should a loss in fair value of 0.5 million. Put a dollar sign, 0.5 million in OCI in other comprehensive income. Right. And in statement of financial position, you put 4 million and a financial asset of 4 million in statement of financial position. Right. So there you go. So this statement was part of the question. You delete this part. Are you not seeing I saved myself quite a lot of time because I copied the questions and brought them to the front so that I'm no longer visiting always the requirements. So notice this is a 7-mark question. It says, discuss whether whether directors are correct to treat Melon as an asset acquisition. So let us come to Melon. So I can close the exhibit which was talking about strawberry. So you may say, suppose I close my exhibit by my answer tab by mistake. Won't I lose my data? If I close it like this, you won't lose anything because you can equally open it and your stuff is still there. This thing is saved on cloud. It's exponentially saved, meaning it is saved on the go. You don't struggle much with saving. So you may say, what is it about that thing which looks like saving? This is not a save button. Don't click this in an exam. It's actually a reset button. So if I click it by mistake like this, it tells me that, are you sure you want to reset, not to save? Then it tells me that resetting will remove any response you have made on this item. So I say cancel. Because if I click OK, it will delete everything that I have typed so that I will never find it again. It will put this response option in it and answer the state. So please don't try to save and click this. Otherwise, you cancel everything you've done and you will not retrieve it. You get that? Okay, so Shingai, are you there? Shingai, can you hear me?
Yes, I'm there. I'm having network issues, but I'm there.
Oh, okay. The reason why I'm asking you is, remember in the morning, was it yesterday, where you were asking about the answers being long? Am I answering your question with this one?
Yes, yes.
Are you not seeing that it's an aspect of question practice? If you practice as much questions as possible, you won't even have issues with this. If you practice questions, you'll be confident that no matter the answer is half a page typed by the examiner, 4 marks are enough when I've just written those 2 points, those 3 points. You can tell from question practice. So that is the purpose which I said, let me type it myself, so that I will then answer you and answer everyone else as we are practicing questions from the question bank. Remember, I gave you question bank and I whispered. I gave you question bank, right? Can someone unmute and talk to me?
Yes.
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 That question bank is all you need to pass. So I'm happy when you guys are doing question bank. It's not Shingai alone. Majority of you are already asking me questions from the question bank, and I'm very happy about it. You can see that I'm always with you in mind, but the reason was I needed you first to finish the curriculum content, meaning to finish the practice information at hand, so that to have knowledge, so that when you are practicing questions, it becomes easy like this. It ceases to be an issue. But imagine if we had not done groups, if we had not done anything. So concerning groups, you know, there were students who said, say, the video you did send on YouTube on groups illustrations. Some are saying I have a problem with eyesight. So I said, I don't know if you are in the class or you play the video again. Notice when you are in this part of the video, I am responding to you with this. I want to send, because you are saying the one on YouTube is not legible enough. So what I'm going to do is to send you the one on Facebook, so that you know the Facebook videos were streamed. This one was streamed some time back, so they then answer me on that particular issue. Let me go to my Facebook account. You know, don't say, oh, these pictures are mine. Remember, it's just a Facebook. You know what I can, you know, the pictures that I put up there, they are just pictures of you as my friends. Okay, so there you go. It was illustration. Some of you received the videos later and you may say, why is it you appear to be getting these answers right? Where is this well explained? That after this lecture, I can equally go to that video and see step acquisitions, etc. Okay, so this is the video. I'm going to give you two videos where I illustrated on group. They are already in the group, but some are YouTube videos. And I had a question. I had a student who said, say, please, not legible enough. So I have you in mind. And because I have you in mind, no wonder why I am sending this. Just hang in there, guys. It doesn't take me 5 minutes, 2 minutes. It's okay. It's SBR, you know, right? So you may say, why is it you are explaining this in detail? Where else are these questions explained? This is the issue. Your colleagues had played these videos already. This is a video on illustrations on groups. And then I gave your colleagues two. The other video was on Zippo. You remember? The other video was on Zippo. Hello? Ah, well. Oh, sorry, I'm already hearing myself in that video. So I thought it was someone talking. So the other one was on Zippo. This is Zippo group. I gave your colleagues this one again. Right? Oh, no, this one was on YouTube, which is the one I am trying to say, Zippo. Oh, actually, the Zippo group is legible even on YouTube itself. There's no issue there on this one. And the other one was consolidating foreign operations. Consolidating foreign operations. The Zippo one was quite okay. So you can still play the Zippo one that I sent to you. But this one, I'm just trying to consolidating foreign operations. If you can see it, I need the Facebook one. Is it this one? I'm sure this one will play the trick. So let me send this one to you. As I'm opening the video, I'm also showing you how to access these videos. Should you fail to get the video on YouTube and perhaps you are a friend of yourself on Facebook, you can equally access these videos as well. They are obtainable way. But as you can see, I am leaving out some videos and choosing some. No wonder why I always encourage you to wait for the videos that I give you. Because some videos are not relevant to your semester. I had to put a lot of spices to make the video appropriate for you. So if you then just fish any video, yet you see yourself leaving out some videos, you can then rely on things that are in the syllabus for the semester, which is previous. You know, the syllabus, they do change. Just after a year, a syllabus changes and they bring another stuff. So when I put additional stuff, make sure the videos you have are the videos I gave you. They are obtained in our SBR class group. Class group, that's where you get it. On YouTube and stuff, they are just videos for everyone. But the ones which I want the students to learn, I order them in the SBR class group. Those are the ones I want you to focus your attention to for this particular exam. Okay, but don't worry, in August, you are going to have plenty of videos because we'll be revising almost twice a week. So August, in August, once we start a revision lecture, so let's say this one, be prepared that this lecture will be ending at 11 p.m., at 10 p.m. Please don't, come August, don't expect this lecture to end at 8:30. You need to have your everything in order to tell whoever is cooking, if you are the father of the house, to say start preparing mine around 9:45 or so, so that at 9:45 it will be done. That's what I'll be doing also here. So if your say is doing it, of course I know ladies may attend to their chores at times, they don't have a choice, but they will still have to play the recording because it will stretch through to 10. We want this, we want to exhaust you with information. Okay, so there you go. Okay, coming to the question once again. Where was I? Here. Discuss whether directors are correct to treat Melon as an asset acquisition. So what you do when you're answering this, you come to Melon. This is Melon. Are they correct to treat Melon? Remember, there are 7 marks allocated for this. It tells you how handsomely you can score marks in this particular exam. No wonder why I like it. This is an exam where 7 marks just for 2 paragraphs like this. On 30 June 2007, Banana acquired all of the shares of Melon, an entity which operates in a biotech industry. Melon Company was only recently formed, and its only asset consists of a license to carry out research activities. Melon Company has no employees as research activities were outsourced to other companies. The activities are still at a very early stage, and it's not clear that any definitive product would result from these activities. A management company provides personnel for Melon to supply supervisory activities and administrative functions. Banana Company believes that Melon does not constitute a business in accordance with IFRS 3 business combinations, since it does not have employees nor carries out any of its own processes. Banana intends to employ its own staff to operate Melon Company rather than continue to use services of a management company. The directors of Banana Company have concluded that Melon Company does not meet the definition of a business specified in IFRS 3 business combinations and should therefore be treated as an asset acquisition. Oh, okay. You know, this one allow me to explain so that I may not type it, but I just want you to come up with an answer and then you tell me. I said I'm not going to ask you, but on this one, let me explain, then I ask you. When you acquire an entity, there are 2 types of, when you acquire things, there are 2 types of things you can acquire. The first thing is you can acquire an asset, or you can acquire an entity, a firm. When you acquire a firm, that's where we say it's an associate or a subsidiary. When you acquire an asset, that's where we say it's either PPE or financial asset. You get that. Now, for you to say you have acquired an entity, it's for it to be a business combination. It must, Whatever you have acquired must meet the definition of a business in terms of IFRS 3, business combinations. Now, here's the definition of a business. A business basically is an integrated set of activities or assets which are capable of being managed to generate returns to investors, be it in the form of dividends or any other dividends, reduction in costs or enhancement of assets, etc. That's a business. Let me repeat. A business is an integrated set of activities which is capable of, or assets, which is capable of being managed to generate returns to investors. Returns in the form of either dividends, in the form of either cost reductions, or any other return to the provider of finance or members. That's a business. So, if as Uplands Resources, I have a patent that I have acquired, my only asset here is a patent, and you acquire Uplands Resources. Imagine, my only asset is a patent, and you acquire Uplands Resources. Do you, this patent, we use it to carry out research activities. And as Uplands, we don't have employees, but we outsource employees. In other words, a separate firm does HR issues for us. So if you come to Uplands and say, I want to acquire your patent, and then we tell you, as Uplands, we don't have employees. Employees who run this patent for research and stuff, they are from another firm. And then we tell you further and say, look, this patent, we recently acquired it. It's still new. We are yet to generate meaningful returns from it, but it's an asset. We use it for research activities. Does Uplands meet the definition of a business or the definition of an asset? When you're acquiring Uplands, are you acquiring a business or you are merely acquiring an asset? That's a logical question. Now, let me escalate it and tell you something. For it to be a business, there are some auxiliary additional issues you need to consider, though they are not integral for it to be a business. Like a business must have processes in place. It must have inputs and processes and outputs. These inputs and processes must be capable of generating what? Outputs. But it's not a requirement that they should be outputs. But they must be inputs, and processes must be capable of generating outputs. So if you find us without outputs, it's not necessarily a requirement to have outputs, but inputs and processes must be capable of, that's where the issue is, capable of generating these outputs. Notice, the definition says you must have inputs and processes. It does not tell us who must be running these. So if as Uplands we outsource personnel from another company to run this for research for us, it means we have processes in place, because the definition doesn't say your employees must be doing it. No, it simply says you must have processes in place to convert inputs into outputs. That's one thing. Then you say, as Uplands Resources, do you have the inputs? Yes, the input that we have is the patent that we have, that we use to undertake research activities. These are now processes. Whether the one undertaking a research is an outside person doesn't matter, as long as the processes are in place to undertake research capable of producing outputs. That's fine. The fact that this patent is still new and we haven't had any meaningful output yet, it doesn't disqualify it from being capable of producing outputs. So, from what we have read, from what I'm telling you as your say on business combinations, on the definition of a business, if anything meets what I have said, if you acquire that, you are said to have acquired a business. And if you acquire more than 50% of it, it becomes your subsidiary. Whether it has got employees or not, whether they are outsourcing those who are running it, it's now another story. But if it falls short on what I have just said, it ceases to be a business combination. It is called an asset acquisition. In this case, you've just acquired a patent, if it falls short. Now, let us now go to Melon and see what is obtaining on Melon. I have read it already, so let me paraphrase it. Melon owns a patent to undertake biotech research activities. That's its asset. It recently acquired that patent. However, it doesn't have employees. It outsources other people from another management company to come and undertake research. The patent is still new, so it is yet to manufacture meaningful benefits. So talk to yourself. If you acquire Melon, have you acquired an asset or have you acquired a business? Let me ask Kuzi. Let me ask David. David, if you can hear me. If you have acquired Melon, have you now acquired a patent or a business relative to what I've just said? Okay. Perhaps David is not hearing me or she has issues with audio. Can someone please answer me? You just unmute and talk to yourself. Just unmute and talk to yourself. Guys.
I think if you acquire Melon, you've acquired a business because there are inputs and processes available.
Yes.
The inputs in form of a patent. And yeah.
So, are you not seeing there are 7? You are correct, Shinga. Are you not seeing there are 7 marks allocated? Now, the question is, say, how do I gobble the full 7 marks? How do I answer it? First, define business in accordance with IFRS 3. First, a business is an integrated set of activities or assets which are capable of being managed to produce returns to investors or members in the form of either dividends, in the form of either reduction in costs, in the form of any other return. That's a business. Other factors to consider is, do we have processes? Do we have inputs in place and processes to convert these inputs into outputs? So inputs should be capable through processes to be converted into outputs. It's not a requirement that they must be outputs. It's an aspect of inputs being capable of being processed into outputs. Now, applying this guideline, here is how Melon should be treated. That's how you answer it. As my student, always be fond of that statement. Applying the above guidelines, this is how directors should treat Melon. Melon has got inputs in the form of the patent that it has acquired. And processes are in place. An outside management firm is running research activities from this particular asset. The fact that the asset is still new, there is no output yet, it's not necessarily a requirement, provided clearly from the scenario, the asset is capable of generating outputs, though not yet, but it's still not yet, no outputs yet, but it's still capable. So it appears Melon meets the definition of a business in accordance with IFRS 3. Therefore, directors are incorrect to treat Melon as an asset acquisition, full stop. You have your 7 marks. So if you were typing what I've just said now, you do notice I've just said something like eight sentences for my 7 marks. So when you open a marking scheme and then you see the marking scheme up to close to a full page, and you think that's the entire. If you read everything in that marking scheme, you do notice my 8 sentences are included. Those 8 sentences is all that the examiner is broadening in terms of explanation, but does not mean my answer should be broadened to the extent of a full page for 7 marks. I'm coming back again to, when I sent the video earlier on to-do list on how to make sure you answer a question to the requirements of the examiner, I mentioned issues of time management. These are some of the executable tasks, executable approaches to manage your time well. Okay, continuing. So you have noticed that. So it's a matter of just coming here to tell to copy relevance in issue here and see. So the question was, discuss whether directors are correct to treat Melon as an asset acquisition. 7 marks. So you noticed you can score quite a lot of marks. I'm no longer typing now because I'm about to wrap it up. I just wanted you to see how CBE exam looks and also to boost your confidence on these and to know that, well, it appears everything that we have done is examinable. That alone is a comforting thing. I'm sure you should be comforted with that. The another question is saying, discuss how deal recognition requirements of IFRS 9 financial instruments should be applied to the sale of bonds, including calculations to show the impact in the consolidated statement for the year ended 31. I'm sure this one. So this one had how many marks? The last one, let me see. The first one had 8, and the second one had 4. The third one was 4. That's 16. And then this one, this Melon asset acquisition had 7. That's 23. And the last one had 7 as well. I didn't copy the mark, so it had 7. It is saying, discuss how the deal recognition requirements of IFRS 9 financial instruments should be applied to the sale of bonds, including calculation to show. Oh, am I still showing my screen? Let me show my screen, guys, so that we be together. Discuss how the deal recognition requirements of IFRS 9 financial instruments should be applied to the sale of bonds, including calculations to show the impact on the consolidated financial statements for the year ended 30 June 2027. So there you go. So how do you go about it? You come to the bonds in question. It's 7 marks again for 2 paragraphs. An exhibit which is just 2 paragraphs is worth 7 marks. On 1 July 2025, Banana acquired 10 million bonds at 5% at par, 5% bonds at par, with interest being due on 30 June each year, meaning 1 year later. The bonds are repayable at a substantial premium, so the effective interest was 7%. Banana intends to hold the bonds to collect contractual cash flows arising from the bonds and measure them at amortized cost. So if you are given this particular statement that the primary reason we are a party to this financial instrument is to collect contractual cash flows, then such a bond is not measured at fair value. It's measured at amortized cost because it is meeting the definition of a contractual cash flow test. Now, on 1 July 2026, Banana sold the bonds to a third party for 8 million. The fair value of the bonds was 10.5 million at that date. Banana Company has the right to repurchase the bonds on 1 July 2028 for 8.8 million, and it is likely that this option will be exercised. The third party is obliged to retain the coupon interest to Banana and to pay additional cash to Banana should the bond values rise. Banana will also compensate the third party for any devaluation of the bonds. So the 7 marks on this is saying, discuss how deal recognition requirements of IFRS 9 should be applied to the sale of the bonds. Now, as usual, I need to explain. These questions are questions which requires you just to understand English and then deduce from that according to what you were told by your say. Simple. So the deal is, let us talk about these bonds. Banana acquired bonds 10 million with a coupon of 5% and they are being redeemed at a premium. So effective interest is 7%. And then we are told that by definition, they have met the criteria for contractual cash flow test. And as such, they are being held at amortized cost. We are told that they are being held at amortized cost. So that we have. So now the question is, how then, you know, what is happening is the bonds were sold. So if this was a bond, we are told that it was sold. The bond was sold. But let me say I am Banana, I acquired this bond and I'm now selling it to you. Here are the terms, pay attention. I am now selling this bond to you, but on these terms. The fair value of this bond as of today, meaning today's value of this bond, is 10.5 million. Then I sell this bond to you for 8 million. But here are the terms of the sale. The agreement of sale says that after 2 years, I have a right to claim back the bonds from you after 2 years. Number one. Number two, if the fair value of the bond after 2 years is now 11 million, remember I sell them to you at 8. If after 2 years the fair value is now 11 million, you give me my bonds and you pay me the 3 million extra because I sold them to you at 8. So you give me my bond and the 3 million. If after 2 years the fair value of the bond is 7 million, you give me the bond and I pay you the 1 million, the loss in fair value. Now, the question is, judging by the substance of the transaction as I am presenting it to you, have I sold the bond to you or I got a loan from you and the bond is still mine? Matthew, in your opinion, I sell the bond to you, but here are the conditions. I have a right to get that bond from you after 2 years. And if the price is above 8 million that you gave me my bond and the additional money on top. If the price is below 8 million, you gave me the bond and I give you the 1 million. So the question is, who really is the owner of the bond? Is it you or is it still me? Yes, Kuda. Is it, are you the owner of the bond or I'm still the owner of the bond? Talk to your say. Anyone? Talk to your say. I've told you the substance of the transaction. Talk to me. Have I relinquished the ownership of this bond or I'm still the owner?
I think you are still the owner.
Yes, you are right. I'm still the owner. Why do you say so? Yes, Shingai, I'm still on you. Why do you say so? You are correct. I'm still the owner. Tell me why. Okay. Okay. So Shingai is correct. I'm still the owner. Now let me say the whole thing once again and conclude. Banana sold the bond to a third party. The bonds had met the criteria for contractual cash flow test and are being held at amortized cost. And now, these bonds are sold to a third party. On the date of sale, the market price of the bond is 10.5 million, but they are being sold for 8 million. And the conditions of the sale are, if the price after 2 years, I as Banana, I have a right to get my bond back. If the price is to repurchase it from you, that's to get it back. If the price is above 8 million, suppose it's now 11 million, I repurchase the bond from you at 8 and you pay me the 3 million extra. If the price of the bond fall, say to 7 million, I repurchase the bond from you and I pay you the 1 million. So the substance of this agreement of sale is that I am still the owner of the bond. You can tell I am still the owner because I am still exposed to the risk of ownership. If the price increase, I am still eligible to get that extra money, that gain. So I am exposed, I enjoy the risks, I mean the rewards of ownership. The reward being, if the price of a bond increase in 2 years' time, I repurchase it and I get paid the increase by the third party, meaning I benefit as the owner of these bonds. If the price of the bond fall, I pay the third party 8 million plus the decrease in price, meaning I have the risk of ownership. I have both the benefits of the as the owner, I also have the risk of ownership. So technically speaking, I have not relinquished the ownership. So I must not de-recognize the bonds from my books, because according to IFRS 9, we de-recognize financial instruments if the obligations have been satisfied. Number one, if the risks and rewards of ownership have been transferred. Number two, this is what is the de-recognition criteria. If I had an asset and I transfer the risks and rewards of ownership to the third party, I de-recognize the asset from my books. Applying this guideline to these bonds, I said I need that line in your answer. You know, at 1.3, you know, at one point I had a class of 28 students who wrote SBR. That was 2020 December, and 25 passed. And in that class, every student told me to say that phrase, I used it. And I said, what is it? Applying these guidelines. So, you know, the examiner, when he was marking, was literally head-butted, because you notice they are from the same tutor. They have, remember, when you fill dockets and you say Atlantis, they know from the register you are from the same tutor as you are saying Atlantis. So it's perfect as it may. And everyone was saying, applying these guidelines. So I'm now saying, as my student, this is what you'll be doing. And imagine how yep, I will be as your tutor. Applying these guidelines to the bonds, you have to be practical to apply. So you then say, Banana sold the bond. You copy the agreement of sale as it is. Banana sold the bonds, but it still has the right to repurchase them back, and that right is likely to be exercised. Also, Banana will get compensated, will get income if the price of the bond increases. So clearly, Banana still retains the rewards of ownership on this bond. Again, the agreement says you copy the agreement as it is. Please be comfortable with copying, not typing. You can say, again, the agreement says, comma, you go there and copy it, paste it. And then the agreement says, the agreement also says, if the price of the bond falls, Banana has to pay the third party for the decrease. So it means Banana bears the risk of ownership. Because if Banana was no longer the owner, how would Banana compensate a third party for a fall in price of something you don't own? The fact that Banana is still paying for the fall of price of bonds to the third party, it means Banana is still bearing the risks that the owner bears, meaning the risks of ownership. So in mitigation, the de-recognition, in conclusion, the de-recognition criteria of IFRS 9 was not met. Because the de-recognition criteria was not met, it means Banana is still the owner. So it must still continue to recognize the bonds at amortized costs. And then once you have done that, you can now have an amortization table as before, like what we did in the previous lecture. Remember, when we're doing financial instruments, we then did financial assets at amortized cost. So after explaining like the way I have done, you then say the bonds must still be recognized as financial assets at amortized cost because Banana is not transferred the bonds. So you need an amortization table which says year, opening balance, effective interest, coupon, closing balance. This is the amortized cost. So the bonds should continue to be recognized at amortized cost. So here it's year, opening balance, opening balance. In the exam, even if you fail to the spelling of balance, you said balance, don't worry, the examiners will give you marks for that. They don't penalize for spelling mistakes. Effective rate. Now, effective rate, they are saying is 7%. This one is income. Remember, this is income because the bonds, we own them. So this is income to profit or loss. And then coupon is at 5%, and then we have closing balance. So the bonds should still be recognized at these values. You know, this is closing balance, but it's what we refer to as amortized cost. It goes to statement of financial position. So Banana has said it has disposed these bonds, yet it still owns the bonds. So what happens is on July 20x5, and this year for Banana is which year? It's 20x6. I mean, it's 20x7, sorry. So there are 2 years now from it purchased the 20x5. So the bonds were purchased. The first year was 20x6, from 20x5 to 20x6, and then the second year was 20x7. 20x7. So here is how the bonds should be accounted for. Opening balance of the bonds was 10 million, 7% of 10 million, 0, I don't know, 7% of 10 million. It's 0, is it? Let me get my calculator so that I don't trouble myself. 7% of 10 million. Now, are you not seeing? I'm trying to type something on the calculator here. Make sure you have activated it by clicking on it. So it's 0.07 times 10. It's actually 0.7. Ah, well, fine. 0.07. It's 0.7. And then coupon is 5%, so it's bracket 0.5. And then why are we using 10 million? Because the bonds were acquired at par. If the bonds were acquired at another value, which is not par, coupon will be calculated on par, but effective interest is calculated, it will be calculated on opening balance, which is the fair value of those bonds. So the closing balance of the bonds is 10.2 for the first year. Then second year, you then put 10.2 because these bonds are being held at amortized cost. You know, this is how you proceed. You highlight the calculator for it to work. You say 10.2 times 0.07, enter, which is 0.714. 0.714, and coupon still remains 0.5 because coupon is calculated at par. So you're now saying this one plus, you come to the calculator to highlight it. How do you highlight a calculator? Notice, perhaps you're not seeing it. For the calculator to be active, what you do is, if it's like this is not active, notice the edges of the calculator. I click it like this. Oh well. Right. Notice the edge of the calculator now. It's now there's this black. Whenever this, it means whatever you're typing on the calculator. Also, this cursor would be flagging like this, telling you that whatever you're going to type now is coming on the calculator, not on the answer tab. So you're now saying 10,2 plus 0,714 plus, oh sorry, let me say plus 0 minus 0,5. So the closing balance on this is 10,41. So the bonds are now at 10,41. So the fact that Banana sold the bonds, we have realized that the D recognition criteria was not met. Because the D recognition criteria was not met, it means the bonds must still continue to be recognized at amortized cost, meaning Banana should recognize finance income of 0,7 and 0,14, and in the statement of financial position, it should still record the bonds at their amortized cost. These bonds, because they meet the criteria for contractual cash flow test, they cannot be remeasured at fair value. They cannot be remeasured at fair value unless the criteria for contractual cash flow test was not met. So there you go. Once you have done that, you are done with your answer there. And you are done with your 30 marks. It took me long because I was explaining. So let me again sum up everything that I said and bring you again into perspective. If you feel like you want to know how to answer SBR on CBE, the beauty of learning nowadays is once we record something, we keep it. I have recorded this and it's for your record. Now, but having done what we have done, have you noticed we have not used spreadsheet? So perhaps let me show you how we would use spreadsheet. Just for 5 minutes and I'll be done. Now, suppose the answer to question A, where we calculated goodwill, you had calculated goodwill on the spreadsheet. Here, you open the spreadsheet response option. This is the spreadsheet response option. It populates your spreadsheet, meaning Excel, but for the exam, it has limited functionalities. So this is the Excel. So once you do this, you say appendix 1. You write it like appendix 1, and then you say goodwill. Remember, we wanted to calculate goodwill calculation. If you still remember, the figures were like, remember being it. If you need to extend the columns, so do it. So $sign. Then you say consideration transferred, like share consideration transferred, then consideration transferred was in 2 parts. There was share exchange, which was you can even a single column would do. Share exchange was 68, and then fair value of contingent consideration, we calculated it then, it was 4 million. And then you say fair value of NCI, we calculated it there, it was 17 million. Notice, I remember my figures. We calculated them today, and I have captured them already. And then you say net assets, we said it was 70 plus 5, and so you have net assets is minus 75, and then you calculate goodwill. Goodwill is, you just add these, so you say equals sum, notice equals sum, open brackets, because I'm highlighting all this, close there. That's my goodwill, 14. For clarity's sake, I can bold it. Now, suppose I had calculated my workings on spreadsheet like this, and I was doing my typing on word processor. So here, where I said goodwill is calculated as follows. This part here, where I said goodwill calculation, it will not be there, this part. So it will not be there. So what I can simply do is, because they said you can show your answer as in appendix. So I highlight like this. This answer will not be there. I mean, sorry, my cursor is super sensitive. This answer will not be there, so I delete it. I delete table. Click delete table. The table is no longer there. Now that I have eliminated the table, I simply continue and say computations. I then say computations in appendix. You have to reference computations in appendix 1 indicate that the correct goodwill, the correct amount of goodwill is, then I say the correct amount of goodwill is 14 million. That's what I would do, because I've already referenced that computations are in appendix 1. And then the journal entries to correct FD's error. So that's it. It's a matter of referencing. So the exam, once you submit your marking scheme, your script, the word processor and the spreadsheet will be presented as response options side by side. When this is being marked, the spreadsheet will display like this as an answer. I mean the word processor. And the spreadsheet will be side by side with the word processor. So the examiner will have them both. Don't bother copying workings from your spreadsheet and coming to the word processor and paste them. Don't bother doing that, because both response options are submitted automatically. When the clock is up, they are submitted automatically. So that's another issue that I just wanted to say. And then another issue is, you noticed that when you're explaining to directors, explain with vigor. You don't need to explain everything that the standard says. Just explain what the standard says to the extent of the question, not everything else that you know about that standard, which is not being required on that particular question. Okay, so as you can see, this has now begun our work in progress, because we said this is now revision week. But when we are revising going forward, don't expect that I will be on a CBE practice platform every day. The purpose of this lecture was to teach you how to answer questions on CBE practice platform. It's not like going forward I will be opening a CBE practice platform doing questions. I'll be opening a question bank or a past paper, doing it on our ordinary Excel and stuff, even without without typing and stuff. But I will then give you assignments, as you shall see, on the first intuition learning management system that I alluded to you in the other video. And on concerning that video, when you play it, remember to share. Cheers, guys. My pleasure. Have a wonderful night. I understand you have learned quite a lot. Bye.